Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, September 22nd. The major indices were pummeled on Monday due to uncertainty over the details regarding the U.S. government's $700 billion plan to fix the financial market turmoil and news that the two remaining major Wall Street investment banks converted to a traditional banking structure. The S&P 500 fell 3.8%, settling at session lows, with all 10 of the economic sectors posting a loss. Financials fell 8.5%, and consumer discretionary stocks declined 5%. The dollar fell sharply, and commodities rallied. Over the weekend, Treasury Secretary Paulson submitted legislation to give the Treasury authority to spend up to $700 billion to purchase troubled assets from financial institutions, with most of the focus on residential and commercial mortgage-related assets. The Treasury believes the plan will address the root cause of the financial system stress by removing the distressed assets from the system. There is some political wrangling regarding the deal, which is adding to the uncertainty of when the proposal will be passed by Congress. Reports indicate there are some disagreements over some additional proposals from Democrats for the plan, including whether the Treasury takes an equity stake in the participating financial companies and whether it decides to limit executive compensation. Sunday night, the Federal Reserve agreed to convert Goldman Sachs and Morgan Stanley into bank holding companies. The move will allow Goldman and Morgan to expand retail banking offerings and give ongoing access to the Fed's discount window. That will place the firms under additional regulatory oversight from the Federal Reserve. In addition, Morgan Stanley said it is pursuing a strategic alliance with Tokyo-based Mitsubishi UFJ Financial Group. Mitsubishi will eventually take up to a 20% stake in Morgan Stanley at book value, according to its non-binding letter of intent. In corporate news, there were several share repurchase program announcements this morning. Microsoft announced an additional $40 billion share repurchase program and raised its quarterly dividend by 18%. Hewlett-Packard, meanwhile, authorized an additional $8 billion for share repurchases, and Nike announced a 4-year, $5 billion share repurchase program. The amount of spending in the government's plan to help financial firms sparked a sharp decline in the dollar. The dollar index fell 2.3%, with the euro gaining 3% against the dollar. This prompted buying interest in commodities, which as a group rose 3.9%. Crude oil futures traded in an extremely volatile manner. The crude oil contract for October delivery, which expired today, spiked as high as 24% to $130 per barrel before settling with a 15% gain at $120. Oil for November delivery, which becomes the front month contract tomorrow, rallied 5.6% to $108.50 per barrel, but saw gains much smaller than the October contract. The outsized gains of the October delivery oil contract suggest that massive short covering rally played a role in the advance. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a good evening.